welcome on board Mr. Deepak Jalan, the MD and CEO at Linc Ltd, to talk to us about their company. Mr. Jalan, hi, thanks so much for joining us on ET Now today. Well, the company had laid out a roadmap of how it wants to, get away from just, let's say, writing instruments to FMCG kind of stationery product kind of company by expanding its reach as well as expanding its range. Tell us, where are we in that journey?
Hi, yeah. As you know that currently, writing instruments is our main business, and we are, as a priority, we are expanding into the adjacent categories, which means, other stationery products which could be sold from the same stationery outlets. So that's the kind of approach we are taking in the near term. And in the future, we would like to expand our distribution to non-stationary outlets also, and then we have opportunity to even distribute products other than stationery.
The roadmap, but the street is expecting a revenue growth of almost 20% with a margin expansion as well. Do you think that is a realistic number, 20% CAGR for the next 3 to 4 years?
So, we are doing we are putting our basics in place, and, making foundations stronger. So I think what we are, expecting would be the result of, what we are currently doing. So if you would see that last year we had good numbers and a good growth. And so, yeah, you are quite right. It may be a little challenge to sustain 20% growth, every year. But for the next 2-3 years, this is the outlook we have.
Are the margins likely to be around that 15%, or given the fact you're focusing a bit more on getting more value-added products, high-margin products, is there a northward bias to the margins as well?
I would like to say that, we would definitely have some improvement on the margins, but not very radically, because, to acquire new customers, you have to invest more. So, this would be the more or less the margin structure.
Sure, that point is fairly taken, but talk to me about Pentonic as well, because that's quite the hype and the street is penciling in a lot on that as well. How has that product panned out for you, and are there more launches lined up, and what are you doing to expand your capacity?
So, so far Pentonic is concerned, before Pentonic, Linc was primarily a sub 10 rupee, product. But now we are in the 10 rupee and above price segment, and we have products at 20 rupees. We have recently launched a product at 40 rupees. And then we also have some products in pipeline, which would be at 30 rupees and 20 rupees also. So our average selling price is increasing. And Pentonic has almost formed about more than 35% share in our overall revenue, which is quite encouraging for us.
What about the capex plans? Because I understand that you're looking at increasing your capacity as well.
Yes, so we already have a new facility, under construction in Gujarat, adjacent to our existing facility. So, which would be ready by end of this financial year. And so that's the plan to expand capacity. Apart from that, we also have a good amount of outsourcing. So there is a flexibility, whenever we want to increase our, capacities. So that's what it is now.
Mr. Jalan, on that note, we let you go, and all the best for the coming quarters and the coming years as well.